Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 542nd edition of this program. Traders, right off the bat, 2 green armies on the board. Imagine, yeah, baby. Johnny 5 is alive. We are back above. The indices are back above the OTAPA, the Omni Trading Academy's proprietary moving average, baby. Eureka on that one. I was worried we were going to stay under it for too long, and then big nosedive. So far, so good. It stayed below for a couple of days and popped back up in U.S. indices. In fact, if you look at all the U.S. indices and world indices, well, the major world indices, I only found 2 that were not back above as of Tuesday's close, and it was Nasdaq and the DAX. But the FTSE, the NIKI, and all the other U.S. indices are now above the OTAPA, so we are going to start buying dips again, traders. And with that in mind, something that you may wonder, hey, Oscar, I thought it needs 3 settlements above or below your average. Well, not when it's been above the average for a very long time, and then it gets down below for a couple of days. You need 3 days down below before direction starts to change. If you're above the average, it comes down below it for a couple of days, goes back above it. The first day back above it, we're buyers that day. So it doesn't mean change of direction. It means continuation pattern, and that's what we're hoping for. That's what gives us our green omni for the S&P on Wednesday. Traders, this video is being filmed on Tuesday night, which would be February 2nd, for trading on February 3rd, 2010, and that's for Wednesday's trading. All right, traders, in the corn, very interesting. There's a gap above where the corn is now. Looks to me like the corn wants to pop a little bit. Maybe it's going to run up and fill that gap. And with no further ado, I got a bunch of charts I'd like to show you, so let's go look at some charts, traders. Okay, traders, the first chart this evening is the Dow Jones Industrial Average Daily Bar Chart. And hey, a round of applause. Eureka, baby. Look at that. We are above the Omni's proprietary moving average, and we got above this little parallel channel, which also looks a bit like a flag, right? There's the pole. There's your flag. Market gets above the flag. It gets above the average. The Dow is now back above the OTAPA, and we are buyers of dips for that reason, and because most of the other indices are now back above that average. And as you will see before this chart segment is over, the indicators, the technical indicators, are quite bullish all of a sudden in the U.S. indices. Let's look at more charts here. Okay, traders, once again, same sort of picture. You have the Emini S&P daily bar chart. The ES is now back above the OTAPA, or the Omni Trading Academy's proprietary moving average. We like the way it looks. I love the way it popped out of this flag. Once again, your pole, just like in the Dow, here's your flag, gets above it and gets above the Omni average. Market is right here, right now. We like it, traders. I think it starts to pop right back up. Boy, oh boy, am I glad we did not spend 3 days below that average. I was really beginning to worry. Let's look at a few more charts here. Okay, traders, now we are looking at the Russell, one of the quick movers, one of the leaders. The Russell did get down below the average for 1 day only. 1 day settlement, that would have been this day here. Immediately went back above. Then on Monday, Tuesday, ended up here. And for Wednesday, we expect it to move higher. As you can see, another parallel channel and well above the Omni average. Go Russell, another bullish indication, another bullish indice. I am glad to see we're back above that average, and I am really glad to be buying dips again. Let's look at a few more charts here. Okay, traders, here we are in the Dow Jones Transportation Average, the leader of the U.S. indices. This is the OTAPA, or the Trading Academy's proprietary moving average, and we settled just above it, which means we are now back above the Omni average and this blue trend line that stretches all the way back to March. If you look at it now, we basically tested that trend line, held it, got back above the Omni, and are now solidly above it in most of the world indices and almost all the U.S. indices. That, to me, means continuation higher, and whew, dodged the bullet on that one. So far, it seems back to buying dips. A few more charts here for you, traders. Okay, traders, another daily bar chart. This one is the FTSE, the Financial Times Stock Exchange, the index for London. And as you can see, clearly back above the average. The settlement is here. The average is down there. We settled above it, and it looks good with technical indicators. Another bullish indication that we will be moving higher on Wednesday. A couple of more for you, traders. Let's keep going. Okay, traders, very, very interesting chart here. This is the NIKI, the Japanese stock index. And as you can see, by the way, it's a daily bar. As you can see, boy, oh boy, does it respect the Omni average. When it got above, it blasted off. Look what happened. The U.S. indices, the DAX, most of the European indices all broke down through the Omni average. But look what happened with the NIKI. Came right down to the average and rallied out. Beautiful. Look at that. Just touched the OTAPMA and away we went. We're all the way back up here now. So the NIKI looking really good, really respecting the Omni average and giving credence to the fact that we're turning already back towards the upside. Now I'd like to show you a couple of more charts here, traders. I won't keep you too much longer, but let's continue to look. Okay, traders, this one did not yet get back above the average. This is the Nasdaq daily bar chart. As I have mentioned to you, and I don't know, I guess for the last month and a half or so, I've been mentioning that the Dow Jones Industrial Average and the S&P has been showing some leadership over Nasdaq ever since around October, November of 2009. The last few months, it seems to me that the Nasdaq's actually trailing a little bit behind the S&P. What does the S&P do? The S&P gets above its channel and above the Omni proprietary on Tuesday. The Nasdaq only gets right to it and stops, which means the Nasdaq is slowly behind or slightly behind the S&P. What does that tell you, traders? It tells me that we are correct, what we've been calling since October, November, and that is that there's been a big rotation out of small cap stocks and high tech stocks and back into brick and mortar. Traders, that means that the fund managers are slowly getting back into this market. If we stay above this average, I say we just continue on, get back into this channel here, and just continue forward with our ascend towards the upside. Let's see what happens, traders. I'd like to show you a couple of indicators now on the indices so that you can see not only are the formations bullish, but the indicators are as well. Okay, traders, we're looking at daily indicators. Basically, they are the daily indicators of the U.S. indices. These happen to be wrapped around the Dow Jones Industrial Average. Traders, look at how oversold the oscillator, the stochastic oscillator was in the Dow Jones Industrial Average and turned. Percent came, percent decrossed. They're both pointing up. I like it. That's bullish. You look at RSI, or Relative Strength Index, nice turnaround, nice little W bottom, ricocheting right back up. There is no indicator that I can find, or at least the major indicators that I like to use on the indices, that is not bullish for Wednesday's trading. So go Green Omni, go indices. Let's hope we stay above the OTAPMA. All right, traders, corn is next on the board. Okay, traders, this is corn. This is a very interesting chart. As you can see, corn is another one of those markets that truly does respect the OTAPMA. As it was below for a while, when it got above, it had a serious rally. Once it got below, it actually left a gap and broke down pretty hard. Now I think this gap gets filled. The corn is turning right here. It's got very bullish indicators, and there's more on this chart. I am a firm believer, and I teach this all the time to my students at the Omni Trading Academy, that a triple top first has a pullback. When the pullback's over, you race out and above that triple top. Triple tops are known to do this. First, you get a pullback. Whenever the pullback ends, a rally ensues that takes you above and takes out that triple top. That may very well be what's going to happen next, because we did come off after the triple top. We left a gap. We have to at least go fill that gap and test the Omni Academy's Academy's proprietary moving average. And if we can get above both of those, we will take out that triple top. For now, my target zone is somewhere in here where we left a gap and that's somewhere between the 385 and 393 area. Take a look for yourselves, traders. That would be March corn. Now I'm just going to show you the indicators on the March corn, and then we'll speak a little bit and we'll finish this video. Okay, traders, very much like the U.S. indices, the corn has turned basically on the very same day and looks very bullish. Down here are your slow stochastics. You can see that they've hooked. Percent K and percent D have crossed one another. Very bullish look down here, way into the oversold area. It should bounce from here. Then, of course, you have your CCI or Commodity Channel Index above that. That is looking very smart towards the upside. You've had your pull into the oversold area. In fact, on this chart, it was more oversold than we've seen in quite some time. And then it rallied out, which gives it more room to blast off on the upside. So I like the indicators on corn. I think corn has a bullish Wednesday. Pull your charts, pull your indicators, look at the corn, and especially look at all of the indices, U.S. and world indices. And if you agree with our buying scenario, make sure you come on down to our site and see where we're going to buy the S&P and the corn for Wednesday's trading. So, traders, you've seen the charts, you've seen the analysis. I think you know why now we have a green Omni for S&P and a green Omni in corn. The technical picture is there, traders. It's sound analysis. It looks smart. It looks right. Indicators pointing straight up. Markets are shifting. Looks to me like Wednesday, the markets should cooperate pretty closely with the analysis done on them. Do your own technical analysis. Always do your own homework on any market that you're going to trade, no matter who gives that recommendation to you. Don't ever trust anyone enough to trade blindly. Do your own homework. Make sure you recognize, understand, and agree with any recommendation before you go into a trade. All right, traders, no matter what happens tomorrow, we know that a stop is our best friend. We will have stops in no matter what happens, because just because we're above the average, that doesn't mean we're going up, right? That is what usually happens, and I'm ready for it. But if it doesn't, our stops will be in, we'll get knocked out, and it's a manageable risk-reward ratio trade, which is professional, and it's what you should be doing. All right, traders, please come on down to our site. It's www.livewithoscar.com. Jump into the chat rooms, see where we're trading, see how we're trading, and stay with the crowd of Omniacs. A lot of smart traders here that come to our site every day that can help you, especially if you're new in this game, to get on your feet and start pointing yourself in the proper direction. So make sure you come on down. All right, traders, middle of the week coming up. Got a long way to go. Give me a call anytime day or night, 702-629-4755. I'm out of here. Remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.